Hi there, a very good morning, good evening to all of you, depending on wherever you're watching me. This is Simply Stocks, and now I'm live in this live session with you all. The session that had to take place probably yesterday, but we had a normal, you can say, video yesterday, and I hope you liked the video. Today, I'm going to talk about a monopoly, a very interesting company that everyone in the Indian diaspora who wanted to invest into the market wanted to buy into. So this is a very interesting company that I'm going to talk about. Everybody knows about it, and so we're going to discuss about this one. And what we are going to do is analyze their numbers, which haven't been that great for the last two quarters, and we'll discuss as to why the numbers were not that great, and I'll answer your queries as well after that. We'll discuss about the market volatility at the moment, and what lies ahead in the next, you can say, 6 8 months or so throughout this 2023, because as we see, we are going to be finishing with the February month, and so 2 months are already gone in 23, and so we'll look ahead for the next 8 months, 8 9 months, as to how things would pan out for the market, and then I'll answer your queries as well. So in the next 20 30 minutes, that would be the criteria for the session overall. uh, so let more people join in. There are number of people that are joining in. It is a weekday, I understand still, and probably some of you might have been out because it's a Friday evening. So that I understand. But after the video gets uploaded, then a lot of viewers do go ahead and watch it. So that's the basic reason for putting up these live sessions, and if somebody gets a chance to be live, they can ask me queries on specific stocks, etc. Bhupender, a very good evening to you. I hope you're doing well, and hope everyone in your family is doing well as well. uh, so probably as more people join in, let's begin the session in earnest. So let's first discuss about the markets, as to how the markets have done, and what is the current condition of the market, etc. So we are at around 17,400 now. The you can say a very strong supports of 17,500 has been taken out, and I have a feeling that going forward, we could be in a situation where we could head towards levels of 17,100 and even 16,800. We'll see. So it's going to be a 300 point move all the way towards 16,900, 800 levels. We broke 17,500. Next level to look out for is, I think, the 200 DMA is around 17,250 or so. That is the next level to look out. And I think we could breach that the way selling is taking place in the market all across the board. But there's nothing to worry much about if you are a positional trader or an investor, because these things do happen from time to time and stocks do decline at that point of time. But overall, the market strength is pretty strong, and currently there is a lot of, you can say, pessimism in the market, a lot of skepticism. So even if you look at the greed and fear index, we are at around 14 15. We have many mid and small cap companies that are down between 40 to 70% and not going up either. So there is a lot of divergence in the market. The market is not quite where you would say that in a situation where you would say that the stocks are doing exceedingly well. The stocks are not doing that well. Apart from few large cap companies have done well, especially the banks, metals, etc. The other sectors that have done reasonably well, but even they are now coming under pressure. We have IT doing decently over the last 2 3 months, and it looks like IT is going to be the strongest sector this year, as we expected. From the last year, I have been talking about IT doing well this year, and this is exactly what is it playing out. So at the moment, what I feel is that one needs to be invested and stay invested, even if you cannot, I mean, sell at low prices, or you cannot buy anything at such low prices that many stocks are trading at. What you can do is just hold on to your positions for the foreseeable 6 to 9 months. I think we are on the cusp of a major rally in across the board, a rally that could be secular in nature all throughout the sectors, and doing well altogether. So my opinion here on in is that stay invested. If you have the money, this is the time to put in your you can say money into very good quality top notch companies across you can say diaspora of sectors. So that's the call on the market. Now let's just discuss about the stock that I wanted to always discuss with you. And for that, let me take you to the screener website where we'll discuss about this company. This is a 20-30 year old company, 30-35 year old company into the consumer domain, and which has been doing exceedingly well. So let's discuss about this, and then I'll answer your queries afterwards. And if you have any queries, you can directly use the super chat and super sticker feature that will help me grow the channel, that will help you ask me questions and eke out answers in greater detail. Also, there's a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. All right, so now let's go to the screener website, and we'll discuss about the company as I mentioned. So this is the company, basically Page Industries. So this is a stock that is currently at around 38,000. Now one needs to have at least 40,000 rupees to invest into this. I agree with that, but the way it has fallen from the highs of around 60,000 has prompted me to bring this up. It is down 35% from the top. Its high was around levels of 53,000 453. That was the high made in October of 2022. So this is basically a 5 year chart, and I'll describe as to why I mentioned a 5 year chart. But around 53,500, if we calculate, then we have gone down big time. If that went to 37,500 recently, we are down somewhere in the region of 30%, nearly 30% from the top. So it made a low around 37,500 if you look at the charts. And it's a 30% downtake on a marquee mid-cap brand of company which grows pretty well. But if you look at their ROE, so this is why I like this company. Return on capital employed 67%, return on equity of 54%. Very strong company in that regard. And I feel that the stock is poised for a big run over the next 1 year as the mid and small cap index it does well. So even if the numbers stay subdued and not that great, if the numbers doesn't decline so much, then also even that would be enough for the stock to propel 20-30% from here, which will just take it back to somewhere around 50,000 or so. So that is what I'm looking at, 50,000 over the next 6-8 months, and the stock could do pretty well in that sense. And at the moment it's down 30% from the top, and the PE ratio has become more manageable. At the moment it is around 62. So if you look at the charts, first of all, the stock is around 38,000. It was around 38,000 somewhere in October of 2021. So that's around something like 14-15 months back. In October 2021, the stock was trading around 37,800. And if I take 37,500 as the low on 14th October, the stock was trading around 37,400. So from mid of October till end of February, We have seen around 16 months of no performance from the stock. The stock went up sharply, made a top in September, October of 22, and then from there on in, over the last 4 months, it has been declining. So this is probably the time to get in. I'll discuss about the valuations in a bit, but one can at least buy 20-25% of the total holding right here. If you have to buy just one share, one stock of it, you are capable of buying, you can still buy at around 38,000. And now looking at the numbers as to how the numbers have panned out. These are the quarterly numbers that we talk about uh, quite diligently. December they had sales of 1223 crores, and the numbers have remained stagnant. In September the sales were 1255 crores. In June it was around 1340 crores. So in the last 3 quarters, the sales number have not picked up, and this is why the stock has fallen big time from the time the September numbers started to come in. That was late October, early November. So that's why the stock has fallen sharply from October 22 over the last 4 months. But if you look at the numbers on a yearly basis, so this is the sales number basically, and if you look at the margins have shrunk from March 22 when the margins were 24%. We are down to 16% uh, in terms of margin in December, and this is what has scooped, you can spook the market big time. That a company trading with you can say a PE of 80, 90 had a having a margin of 16% will not suffice, and that's why the stock corrected to now being having a PE of only 60 and not 90 or 100. So the margins need to improve, which I feel will improve. So what are the factors that have affected the margins per se? The first reason for the margin pressure has been raw material cost, which has gone up sharply. The garment cost, the cotton prices, the prices for the you can say the material from which the products are made, that have gone up, and that has directly impacted the numbers, because you cannot, in a very competitive environment that Page Industries is in, you cannot just pass on the prices just like that as in any other monopolistic industry. Here you have a big unorganized market, and you have to fight with that day in day out. So the margins got hit there. The margins also got hit on the fact that the sales did not pick up that much, and the sales last year or in 2020, after, you can say, if you look at here, sales picked up big time from June 2020 when it was only 285 crores, and so all throughout second half of 2020 and first half of 21, what happened was there was a lot of buying of the products that people were not able to buy during the shutdown of the economy and everything, when they had to stay home. So these products got sold big time, and the products got sold big time when travel started, and travel began in somewhere after June of 21. And you see the numbers from 500 crores, the September numbers shot up to 1100 crores, and it kept on increasing a bit till December. So between this period of June to December, travel was happening, so people were looking to buy into new types of all kinds of clothes. And here also sales picked up big time. Year on year sales looked extremely good, because 2020 was extremely volatile and probably bad for most of the consumer companies. But now things are streamlining, things are coming back to normalcy, people are going out, and we are coming back to that same condition as in 2018 or 2019. And that's why the number, that is also one of the reasons why the numbers are looking pretty bleak, because inflation and interest costs do have effect on consumer sector and on these consumer products. So these two three reasons have been the reasons why I believe that the numbers have got stagnant. But the company has been and has shown over the years as to how the performance has remained robust. So if you look at year on year numbers, but before we go to the year on year numbers, let's look at the last 3 quarters profit numbers, and you'll understand as to why the stock has not performed. Let's look at from September 21. So let's look at from September 21 till December 22 these figures. In September 21, yeah, they did 160 crores of profit. In December 21, they did 175 crores, which is just slightly higher. Again, March slightly higher at 191 crores. And June again, they build up position June 22 with 207 crores. So up till now, things were looking pretty good till June 22. Now remember that numbers in June of 2022 would have come in by end of July, early August, or somewhere in that region. So if you see between July and in June, July 2022, how was the performance of the stock? So we go back to this period. Actually, from June onwards, it picked up steam from 40,000 in June, late June 2022, on expectation of strong results. The stock started to perform, and then results came out somewhere around here. That's what I feel. I think around end of July or early August results would have come out, and because of the momentum in the market the stock went up even more in September, but eventually it fell once the September numbers came out in October. Things really started to look bad. So the numbers came out in early November. Stock was around 49,000, 49,000 and 50,000 levels, just about at the 50 DMA, and it crashed from there. From there, the stock is down by 12,000 points or 12,000 rupees, and you can say 25%. And this is all because of probably that September numbers that came out. So let's look at what happened in the September 22 numbers. So if you look at the September 22 numbers, it came out to be, and there was no increase. So till now, from 500 crores in June 21 till you can say June 22, there was a continuous rise in sales numbers till 1341 crores. From 500 crores, we went to 1000 crores, 1200 crores, and then 1300, 1350 crores. Up till now, everything was fine. Even in the profitability front, from 11 crores, profit soared to 160 crores. It went up to 175. This is, we are talking about quarterly numbers. On quarterly basis, we were growing by around 8 to 10%. 191 crores that came in March of 22. But from June of 22, things started to look very different, and by the time September came in, the numbers were abysmal compared to other quarters, last 5 6 quarters. So 207 crores of profit became 162 crores of profit, and that's why the stock fell. And once the December number came out, which was in late January, early, you can say around this period of the December number came out around here. So that's where. So around January, the stock fell even more, and over the last 1 month, even from levels of 40,000, it has gone to 37,000 or so. Even from the bashing it received from the top, it has gone down another 7 8% after the December numbers. So it is a direct correlation. That is what I'm trying to say with the kind of numbers that the stock is giving. But I believe these margins of around 16% should hold, and I think 16, 15, 16% they should do, because if you look at yearly numbers, then you see the margins from 2011 at 19%. Had a dip in 2017, it had around 19%, and then it went up to somewhere around 20 22% and dipped again. So I don't think the company can do more than 20% in this inflationary environment. And so 16%, if they can maintain between 16 to 17%, and if in March they come out with even 17% of margins from the 16%, I think the street will take it well, because street will believe that 16% is probably the bottom of the bottoming out of the margins that the company is producing. So yes, it's a risky trade at around 38,000 before March numbers. what you can do is you can buy 20% of your total holding now. If you have only 40,000 to invest, probably wait for another 2-3% dip and then buy. But if you look at the PE ratio, if you look at how the stock has performed in terms of PE and where it lies currently, then you will understand that the company itself is now that the stock is bottoming out and there is very little downside that could be there. So if you look at the charts, first of all, 36,700 is a strong support on 8th of October when it shot up from 32,300. It went to 36,800 and it never looked back. So currently the stock is at 38,000. So a 1200 point downside is there, 3-4%, but the upside could be phenomenal. So if you look at the PE ratio for the company, and this is a good matrix of whether the stock is expensive or not. So as I said, in October of 22, it made the high. This was around here, if I'm not wrong, and at that point of time the PE was around 100. In August it was around 100 and in October it was around 77. But if we go back to October 21, the levels at which the stock was trading at same as today, so 38,000 was the same in October. The stock was trading at a PE of 110, around 107, 110 at the same price. This is what I want you to understand, that at 38,000 rupees in October 21, the stock was trading at a PE of 108, 110. Whereas at 38,000 today, the stock is trading at a PE of 62. So after such a huge decline, the stock looks extremely attractive at this prices, and I believe it is a very decent buy, especially on the fact that if you look at the average PE for the company over the last 5 years, so this is a 3-year average. If you look at this, then the average has been around 98. Around 98 has been the PE average, and we are sitting at 62 on a 5-year basis, which is a more aligned, you can say, average PE that we can look at. Still, the PE is around 80, 81 because it has taken into consideration the PE of 57, 60, 65 uh, pre-pandemic. When it was trading pre-pandemic, the stock went to a PE as high as so here it went to 100, and on the lower side it's around 51 or so. So not much of a downside. It is trading at the lowest end at around 60, probably a 5% more downside that is there, but the upside could be at least 20 to 30%. So that's why in my opinion page industry is a definite a buy. But especially if you have a 3, 4, 5, 8, 10 year time frame, then this stock could end up performing extremely well from these levels, because you're buying at a 25% discount from the top, and then you have a 8-10 year time frame where the stock could grow at 11-12%. Sorry, the earnings could grow at 11-12%, the stock could grow at 16-17%, which is very decent in this kind of a business environment where your stock will double in what is around 4.5 years or so. So for someone, this is purely for someone who want to hold the stock from uh, say a 2 year time, from a 5 year time frame or so. This looks like a very good, very decent, you can say, buy from that perspective, Page Industries. So I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help you grow the channel. That will help you also ask me questions and ink out answers in greater detail. So growth rate properties, on the property stocks, I am not at all very gung ho. Even if a mid cap, small cap rally come in, I think Godrej property is the best in the business. But I don't think that somebody should be looking to buy into it. I think other sectors are better to be looked at in that sense. So in Venki's, see, any mid cap stock, if you're buying and it is a profitable company, etc., That's better to hold on. I would say even in Venki's, wait for this market rally in mid and small cap in which everything goes up, and that's where you exit Venki's, not at this point of time. Okay. SRF you can buy here, but you should have a 3 to 5. Even if you have more than 5 year time frame, this is the time to buy SRF because of the kind of expansion that they are doing into their different business divisions. It will bring fruit over a 5 7 year time frame. Otherwise, SRF is an avoid. I'm not tracking fine organics, so I won't be able to comment that much. I think Bajaj Auto is fine, but I'm not sure about Polyplex and No Cell. Especially No Cell has not done that well. It comes out with decent results 1 or 2 quarters and then results dip. So I would say something like Bajaj Auto is okay from a long term point of view. So Mastech look good. I think Mastech look good from a 3 year to 3 year time frame. Especially this year, I think IT should do well. So Mastech should end up performing decently. Javed bhai, previous Den Probe, I'm not that sure because of the higher salary that the management is taking, although the company is producing decent results. You can buy on declines if you have it, hold on to the stock, but I won't say you can buy a fresh at these levels. Yeah, avoid Nazara. I think there are better companies in there. Yes, it is the only gaming company, gaming related company that is there, but I would say avoid it. A KPR is good. KPR Mills can give you 17 18% even more if the company does well. I think it is one of the best companies in that domain. Sundaram Finance I don't track, so I won't be able to comment. See, Bajaj Finance, if you have 5 8 10 15 year time frame, yes, these are the levels to get in, but since the growth has stalled, I don't know where the fall could stop. It could go to 5,000, 5,200, and all. So if you have a less than 1 year time frame or less than 2 years time frame, don't get into Bajaj Finance. That's what I'll say. A decent company, Jubilant Ingrevia, but you have to be patient in that to probably buy and hold in order to make money. Not the best of the companies, Keval Kiran. So Rajan, I won't say that you should get in. There are other companies in the textile domain that look good. There are other companies in other sectors that have declined and are coming at attractive levels. Javed bhai, Root Mobile is decent. The last two numbers, especially the last quarter number, has been pretty good. One can hold on from a 2 year, 1 to 2 year time frame. All three are good, Vishy, but it can give you 8 to 10% and plus dividend yield. That's just about it over a long period of time. So that's the call. Yeah. So Kotak Bank, HDFC Bank, ICICI, they are good as an SIP, but I don't follow much banking, so I won't be able to comment. But one can do SIP in there, not for trade, because I believe banking the way they have it has gone up over the last 6 months or so. It's better to avoid or book profits in there rather than hold on to the banking stocks. You can buy Tata Consumer for long term. There's no stopping you. But I believe that the kind of numbers it keeps producing, I don't think it should have the valuation of around 50, 60, 70 P. So the PE shrinkage may happen there, although numbers are decent but not worthy of a 60, 70 P. Yes, Kilpes is not going beyond it. In fact, I was looking at it even today, and this is a stock I'm invested in, and it's quite frustrating. Uh, I believe that let's give it 1 year more, 18 months more, and that's just about it. That's what I have decided. that it needs to perform over the next 18 months. Otherwise, I would have to seriously think of shifting, because if you see Kilpist, in June of 2020, it made a high of 500. Then a year later, in July of 21, it did go to 770, but it crashed down immediately. So it has not gone back to that June 2020 highs over the last 3 years nearly now. So it's kind of frustrating. I bought then, I bought some later on. I'm holding on to it. I'm positive, but let's see how this small cap rally, once this rally comes about, as to how this helps something like uh, Kilpest, and if there is a strong move in the stock, then I might think of booking profits even. So we'll see how things pan out in this small cap rally whenever this rally comes about, because there has been only 15 months, when 16 months now, 16 17 months of decline in the mid and small cap arena on most of the stocks, although the index have gone up and have steadied, but the whole index, the number of stocks are down 50, 40, 50, 60%, as I said. So once that move happens, if Kilpes moves up big time, then we'll see from there on in. Yes, you can buy FL and Titan from a long-term point of view, Ramesh, but be patient in these stocks. FL has had very lofty valuations, and now valuations are correcting because the numbers are 15-20% growth that is coming in with that sort of an ROE of 25% or so. So I think the stock could correct another 5-7%, but yes, you can buy into them. All right, guys, thank you. Thanks a lot for being online. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thank you.